You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we're at it once again. It is time for Volatility Views, the premier program for volatility traders. Coming down to the wire here, listeners. Last couple of shows here for 2018. And oh, what a wild, wacky volatility environment we have to discuss. Just transpose this with where we were a year ago when we were talking on the show about where did the VIX go? Where did all the volatility go? And then, of course, getting into February, all of that changed. And what a wild, tumultuous year it has been ever since. We're going to break all that down. You guys know how to get us by now. Of course, every Friday, noon Central, 1 p.m. Eastern. That's via the Mixler if you want to listen live. Get it in your ear holes instantaneously, or get it on the podcast, pretty much wherever you like to get your podcasts. We don't mind. And if you, however you listen, live after the fact, hit us up. Questions, comments, insights, pearls of wisdom, suggestions for show topics, great charts and visuals. You guys have sent them all again, and we appreciate all of them. Keep them coming. You know how to find us. We do like to hear from you guys. And joining me on the program today for our penultimate volatility views of 2018, we got the meatball, Mr. Greasy himself, Mark Sebastian from optionpit.com, by way of a little thing called Carmeline. Mr. Meatball, how are things with you today, sir, in this topsy-turvy, tumultuous market?
Woot, woot. It is a crazy market, I would say.
So are you saying you're doing a Woot off right now? You're shopping on Woot.com? Is that what you're telling me?
I'm on Woot, actually Woot.net, not Woot.com.
Okay. The secondary, the little sister.
You got the NASDAQ down 2%, the S&P down 1%, the Dow down 0.75%, and pretty crazy. So and meanwhile, the VIX now, people are like, how is it that VXX can be up $1.70, VIX futures are up, but the VIX is down? Well, this is where understanding the mechanics of the volatility index come into play.
All right, hold on, wait. We'll get to all that. Let's get to all that. Got to play the official music first. It is time for the volatility review, listeners.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right. I know you're new to the show, Mr. Meatball, but we do have a little bit of a rhythm, a little bit of a flow we like to do here. Otherwise, it throws the listeners off. They don't know what they're here. What's going on? What's crazy? Topsy-turvy markets. We can't be topsy-turvy on the show, too. As the Meatball alluded to, it is a weird one. It's been a weird week this week. You know, we're coming on the heels of course, first off, we had the Fed earlier this week not being quite as dovish as I think a lot of people in the trading world were hoping or looking for. You know, they kept the rate increase that people were mostly expecting. Some were hoping they would even dial that back. And then on top of that, they dialed it back for next year, but only a little bit, and kind of thumbed their nose a little bit to everything that's been coming out of the administration about, and the market as well, about dialing back their nose, saying, hey, we're the Fed. We kind of march to the beat of our own drummer. And so the market didn't like that, and they liked even less the comments and the responses to the questions after there with Powell. So interesting piece, I think it was by Bloomberg. We talked about it on, I think, Option Block yesterday, where pretty much I'm not sure if you've seen this, Mark, but the market has sold off pretty much every time Powell has opened his mouth.
Yeah, I know. It's been pretty.
All 7 major Fed days that he's actually had a chance to speak and do something, it's just crushed the market. So he is persona non grata on Wall Street these days, and that's kind of playing out in what we're seeing out there right now. As you mentioned, Mr. Meatball, it's a kind of a blood red sea out there across the board. Dow almost off 1%, S&P off over 1%, NASDAQ off over 1%. Again, we're coming into the end of the week now. And now, in addition to the Fed, we've got this old loggerheads in D.C., which is always good for a little bit of vol and a little bit of sell-off, and that's pretty much what we're getting right now. Even gold selling off. One of the few greens on the screen, of course, VIX Cash. Actually, that's off a little bit right now, too, so that's even got red on the screen at the 28 handle. Oil, one of the few slight bright marks, but that's probably going to move into the red momentarily as well. Even gold on the downside after a big run-up. We talked about that on Twifo yesterday, actually. Gold's been moving to the upside, but today not exactly flight to quality. It's one of these moments where, what's the old joke, Mark? When it all hits the fan, correlation moves to 1, right? And kind of seeing a little bit of that today. Maybe crypto is the place we got to go now. What do you think?
The only thing that's not correlating is vol futures, right? That's, we keep telling people that if you need non-correlated, vol's the place to go, and that it is an asset class because it's non-correlated. And everyone's like, vol's not an asset class, vol's just vol. VIX is dumb. Well, guess what?
VIX is dumb.
Yeah,
they add that in for good measure.
That's
VIX
the way
is
they
dumb.
sound. I don't know if you've heard these people.
Yes, they're all my favorites on Twitter.
So then, and then that was that, and all the people. VIX is in a what was the vortex that they called it that was going to keep it low forever?
The volatility feedback loop.
The volatility feedback loop. Where's your volatility feedback loop now, sucker?
Kind of coined by, was it the Journal or was it Bloomberg coined that one? I forgot. Or Reuters. I think it might have been Reuters.
I think it was somebody being quoted in but it was not. That is just not the case.
It was our buddy. Might have been our buddy Saqib who might have coined that one. I think.
It could. I
or
think
one
it
of
could
his.
have been out of something. Gunjan.
Yeah, he quoted someone. Maybe Gunjan. You're right.
Gunjan that wrote it.
One of those two.
There is the volatility feedback loop has gone the way of the dodo. Unfortunately.
Well, we were touching on it a little bit earlier before I cut you off there, Mr. Meatball. It's kind of crazy times right now as we're saying everything's kind of down almost across the board, except for crypto. Crypto, go out there and get your crypto non-correlated asset right now. Up about 50 handles. It was up about 300 handles, Bitcoin futures over there on CME yesterday, back north of the 4,000 level. Today, back shy of that a little bit, 39.20 in the front D's future, but still up 50 handles today. So if you want your non-correlated asset, maybe crypto is the place to go. If you want to hear more about crypto, coming up in a couple of weeks, we'll be talking a lot about that, so stay tuned for that in a couple of weeks here coming in the new year. But Mr. Meatball, we were kind of talking about before the show. One of the things we hit about on the network a lot, and on this show as well, is we talked about it. In fact, we spent a whole 20 minutes or so on the Odd Block yesterday outlining these huge trades that went up. Some of them are hedges, some not, that worked in their favor, and that people still haven't taken them off. And it's kind of a recurring theme with us of if you have a hedge, you have to kind of do stuff with it. And we were kind of discussing before the show. Maybe reiterate that for our audience in the vol space right now. You could do some stuff with your hedges, right?
You can do some stuff with your hedges. There's lots of. Of course, my intern just walked in and handed me a.
You're in the middle of a mouthful of a sandwich while you're talking about your volatility.
He handed me a macaroon, and it is freaking delicious.
Tell your intern he is fired.
All right. Anyway, you were asking me.
about your hedges. We were discussing it before the show.
Yeah,
recall?
it's kind of fun. We're finally kind of seeing the use case of why hedging programs work. One of the things that my broad cap hedge fund has argued is that, we can be long the market and collecting some premium on it and step in and hedge from when we need it. So as I'm looking at the market today, my hedging program is actually up more than I'm losing on my S&P side of my investment. So I'm at the point where now, if you look at total return, if I don't lose money when the market is losing money, and then I make money when the market makes money, I make a big investment jump in my ability to trade and provide long-term return. And that's kind of what this market has given me and allowed us to have is I've got a market where I'm getting my use case kind of proven, which is what I was hoping for. So sorry about your portfolio. It's been okay for me.
There you go. All about the meatball here at the end of the day. You got a little bit of restructuring out there. Not the worst thing unless you're retiring tomorrow, I suppose. As long as but if you listen to a show like this, you're probably pretty savvy on the hedging and active management side. You're not just. I've been saying it before. This whole passive trend. Everyone's going to ride the market up and unfortunately ride it right back down. We're seeing the kind of tail end of that right now. Hopefully, you've been maybe listening to some savvier heads out there and doing a few things, doing some stuff to maybe forestall at least the downside of that curve. You can keep all the upside, but do a few things to maybe forestall that downside. Like I said, VIX Cash nearly 6 handles higher than it was this time last week. We're at about a 28, actually 28 and a half right now, so even higher than that. Excuse me. Where we were at about a 22 or so this time last show. Actually, we did a weird show last time. It was kind of an early time show. So it was a little bit, not exactly a week, but a little more than a week actually. But still, the analysis holds. We're also seeing VVIX out there well north of the 100 level yet again. VVIX at about a 105 or so coming into the show. So about 8 handles above where it was this time last week. All that pointing to a wee bit of volatility in the space. Same could be said for the old VIX futures as well coming into showtime. This has changed a little bit now because we're seeing the cash, it has gapped up even higher. But coming into showtime, there was about a little over 3-point discount, for that front Jan future to the cash. About 3.3 points. The cash was a premium to it. And we're seeing the same there with about the second month, about 4.25 handle discount of that future to the cash. So the cash is just super juicy, I think is a technical term. And but the future is also quite juicy out there, and even more so as we're going on here. Mr. Meatball, before we get into before we even keep rolling, it's always a fun topic of conversation. We only have 2 more chances to discuss it in 2018. Anything catching your eye worthy of note out there this past week in the ever-evolving sea of mystery that is the VIX futures term structure?
VIX has gone super backward. We've been talking about flat. You know what's not flat anymore? VIX term structure. You've got the VIX cash that's 28, the Jan futures almost 24, the Feb futures 22.5, the April, the April futures about 21.25. So you now have what amounts to actual term structure that states, hey, you know what? We are kind of terrified of what's going on. Markets are in turmoil. Basically, the VIX futures curve is saying that we're due for a CNBC special.
Behind the music of a CNBC, if you will, there. The true Hollywood story. And then things got dark, but only the CNBC version of that. Speaking of when things got dark and just volatility in general, I don't know if you saw this. A lot of people have been hitting us up about this article, Mark, from Bloomberg, trying to get our thoughts on it. Your old buddy Mnuchin, which is just fun to say, he's out there doing the rounds on some interviews and apparently blaming our current volatility regime, current state of volatility, on our old friend Mr. Volcker and his Volcker rule. If you're not familiar with that, listeners, that was a hot button topic. Actually, a couple of years ago, I recall I got the unenviable task almost 2 years ago, beginning of January 2017. So before Trump even took office, I was tasked with running a panel over there at Stack on the outlook for regulatory change in the marketplace. Of course, we had a new regime coming in, a new administration in like a week or two, so it was the worst time to be talking about that sort of thing. But we soldiered on nonetheless. And one of the big topics then was, of course, this Volcker rule. And at the time, of course, volatility was high. Well, not quite as high as it was now, but certainly higher than 2017 later that year. And there was a lot of hand-wringing, a lot of consternation even then about the Volcker rule. In fact, the Fed had come out with and done their own study on the treasury markets and shown that there was a systemic increase in structural volatility as a result of all these big prop firms and all these big desks that had formerly been players in the space being forced to withdraw from the marketplace. Guess what? They were backstopping some of that liquidity. When that goes away, markets tend to whipsaw more. So the Fed had actually data that they snuck out on like a weekend. They didn't want anyone to see, showing that the Volcker rule did. And this was just limited to the treasury markets, but of course, I think you can extrapolate that to the broad equity markets. But guess what happened? Volatility kind of went away for the rest of 2017. And all this hand-wringing over the Volcker rule kind of went away. It seemed kind of silly to be hemming and hawing about structural volatility when the VIX was 9 and realized volatility in the S&P was about a 5. Then go figure, this argument now raises its ugly head here now that we're actually seeing a return of volatility yet again. What did Mnuchin say here? He was talking to Bloomberg. He said, over a longer period of time, the markets reflects various different economic components, but a normal trading day now is a 500-point range. A lot of that has to do with market structure, and that's something we want to take a look at. He said stock market volatility has not prejudged what's behind the sharp moves, but he says the market structure, and particularly the Volcker rule, in his opinion, market structure has led to a lot more market volatility. Part of this is the combination of the market presence of HFTs and also combined with our old friend, the Volcker rule. So we haven't heard this in a while, but now that VIX is back north of the 20 handle, it seems to be in favor yet again. What are your thoughts on this? This is kind of an old conversation, but it's all kind of brought to light again by your friend, Mr. Mnuchin, Mr. Meatball. Are you buying what he's selling here, that it is the departure of a lot of these institutions that were backstopping liquidity that has led to a little bit more whipsaw in the market these days?
My thoughts are that, yes, that's certainly some of it. I think you also have a lot of people that just have left the marketplace for the year and don't want to be involved. But he's got a point. But I was talking to an investor over the weekend, and this point was made to me. It was like, I don't really care about whether we're at 2,800 or 2,500 or 2,900. I've made so much money over the last 5 years that none of this really matters to me. So, I think part of this is that, you do have some people that have made a lot of money that are taking their ball and going home as the market gets a little shiftier. And, yes, did the Volcker rule probably prevent some liquidity? It'd be helpful to have some big market making desks. But I actually think one of the reasons why liquidity is gone is more the fact that the exchanges and FINRA and the SEC have worked to, mostly, at least on the regulatory side, unknowingly, to corner a lot of liquidity providers out of the market. In the option space, in the stock space, there are fewer and fewer and fewer people that are willing to do that because of fear of getting run over. And all of these rules on speed, on, being able to tick stuff, being able to, pip improvement, that I think is far more destructive than the Volcker rule. I think that when we decided that it actually mattered whether a trade went up in 5 nanoseconds or 10 nanoseconds, we basically put the liquidity in the hands of very few firms, that in and of itself dried up liquidity. And if I'm one of these few firms, I like it that way because I'm getting to dictate where I want to buy and sell. So I think it's more a result of the exodus of firms that are willing to step in and provide liquidity because they've been cornered out. And certainly the small and mid-tier firms have been cornered out. Spot's gone. None of the active. I was talking to a friend at a pretty big option market making firm, and he basically said he doesn't see any of the flow on big paper because it's all being swallowed up and sold. I'm just gonna say it. I think that fee arbitration and PFOF has really if when you get down to it, is what caused this complete lack of liquidity. They cornered everyone else out of the market.
Yeah, it's kind of a confluence of perhaps unintended and certainly some intended and certainly foreseeable consequences. Well, I think on the Volcker side, you can definitely put it in the unintended. It was a well-intentioned move. I think some of that needed to be done, but yeah, we're seeing the unintended consequences of that as a result. Now you pull out some of the big institutional desks, and you're right, and it exacerbates what we've already seen a long-standing trend in the options world, in particular, for the past 2 decades now. Of you're right, squeezing out market makers, squeezing out liquidity providers, making it unrealistic for them to be able to make a living doing that. And so fewer smaller and mid-sized ones are around. You got a handful of big ones left. And you're right, they're all playing in, if you don't have, they all have own pieces of the different exchanges now and things, right? So they have a vested interest in routing to these different venues. That the whole thing is ridiculously incestuous at a certain point. And so a lot of that has kind of combined to, if you're not part of that game, if you don't own a piece of the venue, nobody deal the route to them, then you can't even really play anymore. Look at the big article the other day, our old buddy Blair Hull, who said on this network a couple of years ago that he was leery about the space and the cost to enter back into the option space. Of course, a pioneer in options market making. He got the heck out of Dodge recently. And, of course, Petterfee famously a year or so ago, also another pioneer in the options market making. He got the heck out of Dodge as well. So, yeah, it's not exactly boom times for being a liquidity provider, and none of that. All of these things have kind of combined, but Mnuchin certainly has a point as well. I think the Volcker rule needs a second look. It tends to get a lot more heat when we're in these volatile moments, when VIX is 9, not so much. But if they can do a little bit of reforming of that may help a little bit. But you're right, some of these structural trends that have been headwinds that have been blowing against the space for some time continue to blow regardless of what's going on with Volcker. Speaking of headwinds, we're seeing that out there these days. I mentioned VIX Cash is popping, VIX is moving. The options aren't really lighting up the screen, though, which is kind of surprising. Maybe speaks to some of what we've seen now for a while when you have these multiple systemic shocks in a row. The market kind of gets a little bit accustomed to it. You don't see the big dramatic movements. We've been saying for a while now the movements in VIX have been a little bit muted, and the volume certainly is following suit. In fact, even though we've seen all this turmoil over the past week, the ADV from last show is actually down 20,000 hands, 575,000 contracts in VIX land now. So ADV continuing to, usually it's seasonal. Usually you expect to see that, but we've seen, a lot of offsetting movements in the marketplace, and yet VIX not exactly following suit. Let's do our top 10 here. The hot VIX options positions, the hot VIX strikes, the big open VIX spots right now in VIX land. Let's go from the bottom to the top, so Mr. Meatball will be happy. Let's start at the bottom. A lot of puts on the list. About 30% of our top 10 this week is puts, so read into that what you will. Usually don't see a lot of puts up there. Number 10, the Jan 18 puts with about 118,000 there. Number 9, March 37 halves. Talk about two polar ends of the spectrum. Jan 18 puts with about 19,000, and then the March 37 halves, number 9, with 122,000 contracts. So two very different extremes going on there. Then we're back to the puts again. The Jan 16 puts with number 8 with 127,000 open, followed yet again by the April 37 halves with about 128,000 open there. So neck and neck, puts and crazy calls going on out here. Then we're back to our third put on the list here, the Jan 15 puts. We got a nice 18, 16, 15 put strip going on, 133,000 of those bad boys open. Number 5, Jan 32 halves. So we got a tale of two extremes going on here. Let's see if we can get some middle ground going. Number 5, the 32 halves, 140,000. I'll get a little more reasonable here. The Jan 24 is number 4, 144,000. Then we go back up to the upside. The Jan 35s, 187,000 for the number 3 spot. Number 2, way back up there again. Feb 37 halves, almost 250,000 of those bad boys open. And the number 1 for this week, our old friend, the 30 strike, in particular the Jan 30s, lighting it up to the tune of just a little bit more than 250,000, about 254,000 contracts open. Total OI, again, we've seen some stuff come off the board a bit. 5.5 million contracts open, so pretty light in terms of OI out there in VIX land right now. About 4.25 million on the calls and about 1.25 million on the puts. Mr. Meatball, anything catching your eye in terms of hot VIX options activity today, sir? Or maybe earlier this week as well?
Yeah, what's been interesting is we've seen a lot of kind of far out of the money stuff being sold and near money stuff being bought. So a lot of people are going after the VIX curve and selling the 40s, the 50s, the 45s, things like that. But we're also seeing buyers of 30 calls, 25 calls, So anything kind of there is a bid in VIX options for anything kind of 32, 35 and under, and then everything over traders are at. I think the biggest trade we've seen today, a trader sold 30,000 of the Feb 40 calls. I like that as a sale. It makes sense. But we've also seen, a Jan call fly buyer, Jan March 23 calls being bought, Jan calls being bought, May 30s, May 20s, Jan 35s. So they're buying all that stuff that's kind of near the money and selling anything that they find to be, that they think VIX will never settle at.
Yeah, you're right. That's kind of the narrative we're seeing playing out there today. You're right. The big print today, 31,920 of the Feb 40s going up for 52 cents. They were about 50 cents at 60, so right off the bid there. That is not opening. A lot of size on that strike already, but still looks like you're right. People are just kind of giving up the ghost on that far upside. Actually, and he came in with another 12,000, looks like, about a minute or so later. So yeah, over 40, about 43 to 44,000 of those have gone up today. Also 52 cents on the second lot there as well. So yeah, crushing that nearer term upside. Maybe some of that we were talking before about 37.5 is a big strike. Maybe people getting back out of Dodge on some of those higher strikes. Also saw a VIX synthetic go up. You don't see a ton of those printing for size out there, but we saw one today on the 29 strike, the Feb 29 going up 14,850 times. Paper, what are they doing there? It looks like they're buying calls and selling puts. So doing that little synthetic there, which is kind of interesting. Not quite for $7. It's like for like 680 or so. And then we got, what we got here? The Jan, we got some puts on the downside, like we mentioned. Puts are still kind of in the mix there. 10,500. I think we have a listener mail a comment about that a little bit later, which would be kind of interesting. The Jan 18 puts going up today, 10,500 times, 43 cents. Those were actually, that's part of a spread with, let's see if I can dig up the other leg. I thought I had the other leg here, but apparently I do not. So yeah, that's part of a spread there. We're also seeing the Feb 15 puts also going up for about 9,999 times for 20 cents on the bid. March upside looks like also catching a little bit of a sale here, Mr. Meatball as well. The March 35s is one of the other big trades going up here today. We're seeing the big blocks of 7,995 hitting the bids for 86 cents, 92 cents. It's about 8,000, 7,000. So big blocks of the March 35s having traded today as well. That's not enough. We also got a print here for looks like a ratio, the Jan 45-70 ratio, 36.68 by 16.68. Says it traded for even money. I'll have to look at how the prices went up on that. It's a bit of an interesting one. But 45.70, we talked about some weird, funky ratios before. Seems like that's what we saw. And yesterday, coming into Thursday, we saw a lot of put action as well. 10,000 lots going up of the March 19 puts for $1.65. Looks like paper maybe drawing a bit of a line in the sand on those, hitting the bid or pretty close to it. So maybe some folks deciding in the near term we got a little bit of a floor on the vol space and blasting out about 20,000 of the March 19 puts to prove just that. Also got some more verticals. So it's a tale of all different extremes going on in the VIX line, which makes it interesting these days. 23.30 vertical going up. Looks like paper bought that for $1.37, 6,000 times yesterday as well. And if that's not enough for you, we got the March 22.40 risk reversal. Paper doing that on a ratio 1,700 by 10,000 times. Paper selling that looks like for $2.50 on that one. So interesting. Oh yeah, also 25.35 vertical for 5,000 times for looks like $1.15 or so. So interesting stuff out here in VIX options land. You're right. In this environment, you wouldn't necessarily assume the first trade would be crushing all the upside you can get, but that's kind of what we're seeing here right now, which is kind of intriguing. We would have seen, maybe you thought we would have seen that earlier materialize, yet we didn't, and now we're seeing it in the later aftershocks of this sell-off. Now we're seeing the upside selling, which is kind of interesting. We did see a little bit, obviously, in last week's show as well, but it has been an interesting narrative to watch kind of play out here. Our old friend VXX as well, predictably crappy, coming in today. Was at 46 coming into Showtime. Let's see if I can get an updated quote on that. Yeah, 46 still pretty much So about 6.5 handles higher than where it was this time a week ago. Let's look really quickly and see if we can find the what is lighting it up out there in terms of top positions out there. If my system would play ball with me. There we go. All right. So number one with the bullet yet again hasn't changed. The Jan 10 puts followed by Jan 15s. These 30 puts still open there for size 73,000 times. Those are looking further and further from possibility. Jan 5 puts also open pretty for size. Jan 33 puts coming in there though. 65,000 of those bad boys. Those are interesting. Those have a chance of coming to fruition there. Then we got D's 27, D's 28 puts. All these D's puts are looking like a bridge too far. Round out the top 10, we got looks like the Jan 50 calls here on the upside, which we seemed silly not too long ago, and now all of a sudden seem like they are within spitting distance of actually coming to fruition there. In terms of today, what we're seeing lighting it up in VXX land, it's downside Jan puts. Looks like Jan 32 puts going up for 13 cents, 15,000 times. These are right off the bid here, so probably a sale, but it's a tight market, 12 cents at 15. So it could have gone up either way, but it looks like maybe close. Oh, actually, it's part of a spread. Let's see. So we got the other leg. We do not have the other leg here, of course, because what fun with that? Oh, here we go. Jan 32 versus 34. Let's got a funky ratio. Jan 34 puts 5,000 times for 27 cents, crushing the bid there. Jan 31 puts for 9 cents, crushing the bid there as well. And then coming in looks like to buy 15,000. So 1 by 3 by 1 of the Jan 32 puts in between. Mr. Meatball, what do you think? Selling the wings 34, 31, and maybe buying the 32s, 3X and VXX. Does that blow your skirt up at all, sir?
No, and VXX.
How did I know you weren't going to like that?
Currently, predictably awesome, right? Yep. Because it's now got a positive roll yield. So, what we mean by roll yield, right? It's not technically that, but it actually has a theoretical positive carry, and so you might offer that VXX is currently predictably awesome.
Yeah, I always hated that term roll yield because it implies things that's
not true, right? That you get something. No, but it does have kind of a positive carry, you might call it. So VXX is predictably awesome.
Have you guys been slinging any VXX of late, sir, in the Carmen Line fund?
Oh, in the Vol fund a little bit, but currently in our hedge, we have been using VXX as our VIX proxy and have rode it from, beginning $35 a share all the way up to where we are currently here, which has been a nice little trade for us.
Speaking of nice little trades, I don't know if this one qualifies, but we also saw a big print today. 6,000 of the D's 64 calls. These are expiring on the 28th, though, so pretty much end of year. D's 64 calls in VXX opening for 4 cents. Or actually, I'm sorry, 5 cents. Lifting the offer on these bad boys. I don't know, Mr. Is that a Carmen Line print? Are you swinging for the fences here in VX? You're saying it's got this positive quote unquote yield now. So
that's not us.
Is 64 in the cards in the next couple of weeks?
You know what? I don't know.
Next week.
I don't know that 64 is in the cards for the next week, but I will say that I sense some sort of absolute volatility collapse. We're looking at the first positive year since VXX became an actually listed product for the product. And of course, it's the year that it goes away.
Yeah,
so
of course.
Going out with a bang.
Of course.
But yeah, VXX this year, the 1 year return on VXX is currently positive. Yeah. It opened the year at, call it split adjusted $9.39. It opened the year split adjusted at $10.88 split adjusted. So I believe it goes 4 for 1, and it's currently 40. I'm looking at VIX, not VXX. That's the problem. I was like, that doesn't sound right. VXX opened the year on January 2nd at 27.75.
Wow.
So it's going to open up
size positive
50% on the year.
Dude, just put that in your pipe and smoke it for. I mean, too bad Russell isn't here, the keeper of historical data. We could see that's such an aberrant year. How many other years was VXX up?
It has never happened since it got listed. It was up. The index that they ran it off of was theoretically up in '08, but it wasn't a live asset at the time. Unfortunately,
never happened in the history of.
But now, and of course, it's going away.
Yeah,
right. So,
well, we have great hopes for VXXB or 2, whatever the heck they're calling it.
So I don't know. Have you heard? Are they going to drop the B?
I would think so. That would seem to be very confusing. But I've seen weirder things. But this whole year has been weird in the volatility space. So stranger things have. I'll have to reach out to those folks and see if they have any plans for that because the VXXB doesn't really roll off the tongue. Also, it implies you're getting some inferior version. You're getting the B shares, right? And that's not what you're getting. So yeah, the whole thing it's about as misleading as the term roll yield. Let's get on to other stuff. Our buddy Sakib was hitting us up about this. Other people are talking about this. We haven't talked V stocks in a while. Usually we talk V stocks when there's some European crisis going on and it spikes. This time it's kind of the other way. There are some issues obviously going on in the Eurozone with the central bank there and, of course, Brexit and all sorts of other issues. But Sakib was writing today about, especially with the U.S. VIX surging, he's saying here expectations for the vol in the U.S. versus Europe diverging even further. VIX V-stock spread widening to the most since the Feb apocalypse. V-stocks is one of those weird birds, Mark. Talked about it before. I've reached out to those folks in the past and told them, they have the reliable kind of number 2, a distant number 2, but still number 2 in the volatility space. If they actually put a little bit of effort to build it and create, a viable, deep, liquid marketplace. They've had opportunities. People have hit us up all the time. Whenever there's a Eurozone shock, they always reach out to us saying, I like VIX, but I need something a little bit more Eurocentric. What do you got? I always say V stocks, it's the place to go. And yet it's still from a liquidity and everything else level, it's such a distant second that it's kind of hard to reliably say, oh, this is a great spread. You should really try to arb it because one end of that is kind of distant to the other. But still, it's an interesting idea. Have you guys toyed with, or if in your charter, can you do V stocks international vol, Mr. Meatball?
We can, but we have not played with it. I'll be honest.
Is it a liquidity thing, or is it what keeps you away from it?
Just we're just U.S. based mostly what we do. It's a little bit outside of our wheelhouse. We'd have to open up. We'd have to get some access to foreign exchanges and trade more overnight, and we've got enough vol to trade here without a lot of extra help.
there is some more vol here, but you're right. But I like this analysis, and theoretically it is interesting and cool. But it's kind of like saying, the spread between the cost of a McDonald's burger and Joe's burger stand down the corner, as widened. But one can print out billions of burgers, one can barely keep up with a couple hundred. So yeah, it's kind of, you can arb it if you're savvy and you can do that dance. But it's a hard spread to really affect, especially for a lot of the active retail component of our audience out there, until that product really picks up, gets a lot more liquidity. And that doesn't seem to be the German way. For whatever reason, they like to let a product kind of live or die on its own. And they've said, to me, the market will decide whether this is going to become a big thing or not. Whereas maybe if they actually got out there and talked about it a little bit more and put some muscle behind getting more liquidity providers and getting those hours lined up and everything else like that, we would see. Because there is demand for that. There is demand for an alternative out there, particularly for that area. And yet it's kind of been interesting to watch. They kind of just, they're very laissez-faire over there. Kind of just a little rise or fall on its own. And that's kind of what's happening right now. But yes, theoretically, Sakib is right. The spread is wide. And it is interesting theoretically. Practically, from a trading perspective, not as much there as I would like. But maybe we'll see more of that in the next big Eurozone shock. Maybe that'll finally pick up structurally and get a lot more on the table. Let's talk a little bit of commodity vol here as well. Crude vol, obviously, just feeling catching a bid yet again. There was a big article, I think it was in the Journal a couple of weeks ago, about how OIV had its biggest down day. They quoted % of a VIX. So Mark, I know that deeply offended you, but had its biggest down day like in history or something along those lines, as oil vol got crushed after the OPEC meeting. Guess what? Oil vol's back up again. We're seeing, of course, all these OPEC can continue to try to talk up crude, but it doesn't seem to really want to stay up. And so crude vol getting the bid again. The puts are where the bid is right now from a skew perspective. Man, listen to Twifo if you want to break down all that skew action out there. But yeah, we're 11 points higher in OIV, 51 than we were at this time a week ago. Ironically, gold vol, for all the movement it's had, almost exactly literally unchanged. GVZ at 11.6. It was 11.6 a week ago. So gold vol has kind of been this weird beast. It kind of moves to its own drummer right now. Whereas crude vol is all over the map, which is kind of fascinating. And all you guys watching crypto know it did break back, roared back above the 4,000 level yesterday, up 330 handles on those CME Bitcoin futures out there. Today, up about 50, but still shy of the 4,000 level again. But there's a little bit of vol, a little bit of life coming back out there in crypto Bitcoin land, which is kind of fascinating stuff. And really quickly, Mark, we were talking before one of the big drum beats from our buddy Mr. Schwartz, the Flow Master, and others, maybe Russell now that he's a market structure guru, all those who track such things, is will the options market, the options industry in the U.S. finally pass 5 billion contracts in a calendar year? Well, they put out a release from OCC last week saying they hit 5 billion contracts cleared. But remember, they clear a bunch of other stuff, not just options. So the options component, as I kind of mentioned last week, was still shy of 5 billion. It was like 4.91 billion. Well, lo and behold, this morning, they hit the 5 billion level on the part that we care about, the actual options as well. They actually have cleared 5.01 billion options contracts year to date. That crushes the previous level, the previous record of 4.56 billion cleared contracts back in 2011. And there's still 6 days to go. So we're going to add to that total, obviously. So it cleared ADV of about almost 20.5 million contracts this year. That's 22.5% higher than last year and almost 13% higher than the last year they set a record back in 2011. So there you go. Some good news there. At least all this vol translate. This is usually a quiet time of year. People take their ball and go home. This time, not so much this year, as we're seeing a lot of trading still going on back there. Now it's time to see what you guys have on your old volatility brains as we dive into our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, let's kick things off with our question of the week. It is volatility themed this week. You know, we've had a lot of people on the show, this show and on our interview show, this network over the year, listeners talking about different volatility alternatives coming to the marketplace in 2019. We ask you guys, which ones are really exciting you here as we're looking at the new year? Is it spikes, aka the SPY VIX coming out of MIAX? Is it our old friends at Voldex, now Demand Derivatives, with their Realday/RealVol, so the realized S&P and other index products? Is it Voldex? Scott Nations was on this show not too long ago talking about Voldex and Skewdex, which are effectively VIX without the skew. So if you've been kind of concerned about the headlines and the issues coming out of VIX lately, maybe Voldex is the place you want to go. Or are you going to stick with what brought you to the dance? Are you going to stick with the old standby, the old faithful? That is VIX. Mr. Meatball, do you have a vote here, sir? Are you sticking with VIX? Are you going to go with one of these other? Any of these others exciting you for the new year?
I'm for RealVol.
Oh, RealVol actually ticking up as we're talking. It's up to 15% now. So
I like those guys.
People listening to the show and piling in on RealVol. You got a day or so left, listeners, if you haven't done so. If you're listening to the podcast, we'll see. Maybe it might be too late by the time you hear the podcast. But if you're listening live, you could get your vote in still. Yeah, I'm with you. I'm excited by the prospects of that. I hope it's been on the horizon for so long. Hopefully 2019 is the year we finally see. I mean, we had that one thing they listed with the EuroVol briefly at CME. But other than that, not a lot. Let's see. People sending in this tweet. I think CME shared this, so everyone's got it on their brain. It's a comment from Mark Twain. He's kind of talking about volatility, even though he doesn't really say it. Good old Mark Twain, that viewer, a commentator of all things. He said, October. This is one of the peculiar. Easy for me to say. This is one of the peculiarly Hard word. Dangerous months to speculate in stocks. The others are July, January, September, April, November, May, March, June, December, August, and February. So basically saying it's always crazy to trade stocks, Mr. Meatball, which Mr. Twain, he's not exactly wrong. It's a crazy one. What a different beast it was back in his day, you know. All sorts of fun going on. We got a comment here from Coley. Coley, I think I'm pronouncing that correctly, saying you could trade the VXX to get in on the VIX. Long-term volatility goes down and spikes for brief periods, and because it is so volatile, at least for now, it's good to trade. VXX has been stuck in the 31 to 41 range. So I've been trading around it, but the best return will be long-term short. Well, yeah, welcome. Thanks for listening. Welcome to the Volatility View Show. We've been talking about that for quite some time. Long-term, you're right, it is short, but Mr. Meatball, as we were just referring to, in the near term, VXX has a little bit of surprises in its back pocket, does it not?
It does.
I mean, you're liking to have a little bit of VXX upside right now, and positive yield for the year.
Mean, it can happen. You know, a lot of people don't forget that in 2011 it had a positive yield for I don't know, 5 months. So, you know, I was looking back. These trades have, you know, these cycles of true vol have been, you know, up to 6 months. So, you know, there's no guarantee that we get out of this thing on, you know, in the next couple of weeks. It could be a long time.
Indeed. All right, see, we got more coming in here. We got Pat Hennessy, frequent tweeter about all things VIX. He's at Pat_Hennessy on Twitter. If you want to give him a follow there. He said he sent in he's got some fodder for our show here for Vol Views, and he sent in an interesting chart of the put open interest in VIX, and he said there's a total of 6,600 VIX December puts that will be in the money if the VIX settles above 24, and then there's 1.66 million VIX puts will expire totally worthless. This represents over 64% of all open VIX puts. Thanks for playing. Better luck next time. Yeah, you know, it's funny. People have been talking about, and I mentioned today in the top 10, there's still a lot of puts open for size out there in VIX land. That has been kind of the trade du jour for quite some time, has been fade via VIX puts. And as he points out here, Mr. Meatball, if VIX stays at these levels, it's going to be a lot of unhappy put campers out there in VIX land. That's quite a substantial number of OI for VIX these days.
That's pretty substantial, and I think that's a sign that there's some hedging activity. I'd like to see. Remember, how big was the OI back in you know, when things were really blowing up in October? Just to kind of put things for people put people into perspective.
I don't know. I'll have to dig up and find that. I don't have that available on my system at the top of my head here, sir. But you're right. Yeah, there was interesting periods there too. We have seen this. It's kind of been a persistent drumbeat to those puts, and I think a lot of those have gone out worthless of late. You can make the same argument with VXX puts, right? There's a bazillion of those open, and at least right now it seems like those are kind of going the way of the dodo as well. So yeah, this kind of maybe goes back to that volatility feedback loop we were talking about earlier. A lot of people are leaning on that side of the fence. Certainly analytically you could see why they would, and yet in the near term, irrational exuberance, shall we say, is taking hold of the marketplace, and it's not giving any love to these 1.66 million VIX put holders that are, unfortunately, at least if things stay the way they are right now, going to probably go the way of the dodo. JLVC, wants to know what our predictions are. What's the Vol crew predicting for 2019? We're going to get to those, I think, next week. Next week will be our big prediction show here. That's our last show of 2018. So that's a good time to be prognosticating on Vol. So we'll save that one, Mr. or Mrs. JLVC, until then. San Foi. I think we talked about this recently, but maybe I'm misremembering. I thought we answered this though. He wants to know, why are there no options on TVIX? Didn't we answer this not too long ago? I thought we did.
They can't.
Yeah. Basically. Explain why, sir.
I think it's just how it's set up, as you know, the structure of it is set up and as such that they can't. I don't remember the exact details. When TVIX was more relevant, I knew better.
For the days of TVIX. There are those out there right now who argue that it is relevant again because it's one of the last of the Mohegans, right?
Yep.
Whenever I slam TVIX on this show, I get a lot of angry tweets and responses. So there are those out there who are the devotees of TVIX, and they like it. But yeah, that's one of the reasons we want to talk about it. There's no options on it. So that's kind of where we like to engage with these products. So that alone makes it not exactly a big point of fodder for our show. And on top of that, it's had a lot of issues in the past and a few other things which we don't need to drag up again. Go search the history of TVIX if you're interested. But it is, by default, one of your few remaining options, pun intended. So if you're interested in that, it's still out there. But yeah, that's why we talked about it before. I thought we had this question not too long ago. Let me see here. All right, we got more, but we got to keep on rolling into our final segment. Some may say the most difficult segment of all. It is time to peer into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
You know, I've been mocking you lately, Mr. Meatball, because you've been playing the Russell role here on the show as the one who's the diehard buyer of all things VIX. I know you're fading your book a bit, so there's some of that going on as well. But actually, it seems like this one has worked out for you fairly well. I've been persistent to the downside, so maybe I'm in the camp of some of those people who are going to maybe have their VIX puts going out pretty soon, as I've been looking to the downside and it has failed to materialize for the last few weeks. So it's breaking my streak. I had a good, nice winning streak going for most of the year here, last couple of weeks here. Not so much, but yeah, you were looking at 27 and a quarter, and we're at about 27.60. So not bad, Mr. Meatball.
That is, given how much we're moving around, that's pretty darn good.
Your hysterical upside frenzy has finally hit the bullseye. Well done.
Thank you very much.
So I see the floor to you. You get to go first for next week. What is your prognostication?
I'm going to go for it. I'm going to go. Next week. So are we recording on Friday next week?
We are. Will be our final volatility views of 2018.
All right. So I got to think about that. But we're not recording on Monday for Option Block, correct?
We are not. No, that's Christmas Eve day.
Yes. All right. So since it's just next week, I think I'm going to say 28.85.
Wow, the updrafts continue, huh? You know, it's hard to argue with that of late. You know, I've been slowly forced to drag myself up to the upper end of the spectrum. But you're right. You know, it seems like whenever it seemed like we had, you know, and I was joking about it almost as soon as vol views ended last week. All these things we were factoring in. The one thing we neglected to talk about was the pending shutdown, which of course, once the Fed was out of the way, it seemed like all the event risk would come out of it, but actually no, VIX got bid.
Nope.
And then on top of it, we have the additional event risk of the shutdown. So that 1-2 combo proceeded to
did not work out well.
Continue to give VIX a lift over. So yeah, I'm forced to drag myself up a little bit, not quite to the Russell Rhodes levels that you are at here, but I was at 19 and a quarter last show. So let's just say a little bit off from this week's level. We don't need to get into numbers. And we'll just look at for this coming week. I have to be in a 20 handle because it is just not giving up the ghost. The VIX futures are not looking like they're going to give up that ghost anytime soon. I'm going to move myself up a nice, I'm going to say a little bit 420. I'm going to move up to 23.45. So there's your spread for this week, Mr. Listeners. 23.45 on the downside, 28.85. So Mr. Meatball is about 1.5 points to the north. I am, as we are right now, almost exactly 4 points to the south. So we got a nice chasm. Anything could happen in between. You got thoughts? You got ideas? You have your own suggestions for where vol could go. Hit us up. Let us know. We do like to hear from you guys. Probably should play the right music. That would help. But no, I don't think we'll have an official. Maybe we'll have an official crystal ball poll for this week to end up the year. There it is. All right. We already did the mail. But maybe we'll do that. You guys like to play along with those. Maybe we'll have a fun one. You guys can play along because this is going to be our final Vol Views of 2018. Maybe we'll have you guys play along for the grand prognostication of where VIX will be at the end of 2019. Challenging. That's kind of a fun one. Maybe we shall do just that. We'll hold some people's feet to the fire, friends of the show, make them play along again. And then we'll see who the winner is this time next year. But that music, Mr. Meatball, means we are done. We shall see who is correct. This Russell Rhodes turn has been working out for you of late. We'll see how it works next week. But before we go, Mr. Meatball, people are interested. They want to learn about how to do stuff with their hedges. And maybe they want to learn about the positive yield and all the other fun stuff going on in VXX. Where should they go? What should they do?
You can email me, Mark, at Carmen Line Capital, and I'll be glad to talk to you about how we can use volatility to make these big sell-offs not hurt nearly the way you might expect. So, you can email me, Mark, at CarmenLineCapital.com, the Carmen with a K. And if you want to know about VIX and volatility and trading and how to be smart, we are having a holiday special starting in about 10 minutes for our traders. So keep your emails. Look out for emails from me, folks.
I think we're going to do that. I think we're going to post a poll for the end of next year VIX prediction. That was kind of fun. I did it before. You guys like playing along. I see some of our friends of the show in the chat right now. Happy holidays back at you. You guys stay tuned for that crystal ball poll. Maybe you can play along in there and make your voice heard there. If you listeners do that as well at Options, we love hearing from you. Have a great holiday season no matter what you celebrate next week. And then we'll be back here one more time, though. You're not done with us yet. We'll see you back here next Friday for a little more Volatility Views.
Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.